Risk is an unavoidable part of life. You can't remove it altogether, and you wouldn't want to, because the flip side of risk is reward. What really matters is how you prepare for the unexpected.
I'd say I've got a pretty healthy appetite for risk, providing the reward's great enough. I rode across the Atlantic with the reward being a world record and the risk being potentially catastrophic.
I think we consider ourselves, both of us, fairly risk-averse people. That's not to say we don't enjoy a bit of adventure now and again. I think with the travelling we do, adventure is a big part of it. But in terms of investment and finance, we are cautious people by nature.
In life, I'm not really a risk taker. I'm a project manager, so I'm a professional worrier. I worry about making sure my projects are on time, they're on schedule, within budget, my clients are happy. However, with my money, I find I'm actually a bit more of a risk taker. A little knowledge goes a long way. I'm able to make more informed decisions, and it's allowed me to make sure that my money works that little bit harder for me.
I think we are much more risk averse.
Now we have a baby,
Yeah, absolutely.
Of course, not going back to work, my decision to do that is, for now, is a massive risk, going down to one salary. But we have weighed out that risk before. We didn't just do it and think, oh, I hope it works. We have looked at our finances.
Yes, yeah.
And we know that I can not work for a short amount of time, and we can enjoy being with Una, and then...
Yeah, and Una can enjoy being with us as well.
I think my attitude to risk has definitely changed over the years. The closer that I get to our goal of putting down a deposit for a house, the more risk averse I get, really, because the idea of losing, say, 20% of our savings in a short space of time and then having to save for another extra year before actually buying our house doesn't seem very appealing at this point, and I think I'd rather forego the extra return and try and limit the risk. Obviously, stock markets are affected by news every day, so especially at the moment there's a lot of turbulence with geopolitics. But I think overall I know that in the long run markets do tend to go up, and that at the end of the day, even though they might take a hit because of some news, in the long run I'm willing to take the risk.
To be honest, I don't know a lot about the financial crisis in 2008, but I do know that it's coloured my generation's view of the industry. There's a perception that investing is always going to be high risk and you haven't got that choice or control in what you invest in, but that's not the case. There's always going to be periods of volatility, but being a young investor, that doesn't really matter. If you're investing for the long term, it allows time for your portfolio and investments to grow, but also to average out the peaks and troughs.
I think now, later in life, we're probably taking more risk in terms of finances than we did earlier on. But that's really a function of understanding more about the risks we're taking.
But at the same time, we do realise that it's sensible to have a mixture of assets. So we're careful to put our finances in different places. And I think with age comes the realisation that over time, the longer term view normally wins out.
When we were rowing across the Atlantic, there were many ups and downs, and we knew we had the right kit. We knew that if we didn't do anything rash, the boat would stay afloat. And it's much like with our investments, the market tends to tick up. If we do take a hit, the 20% hit, it's likely that if we hold on and sit tight for a little bit longer, we will reach our end goal. And it was very much like that on the Atlantic. We knew we were going to get there, we just might not get there as quickly as we hoped.
If I was talking to someone who was much younger, I'd actually say to look at the opportunities that stock market investment gives, and particularly at their stage of life, the risk is much lower simply because they have a much longer term to invest in the market. And history shows that over time, stock market investments have always proved to be a good bet, as long as you're in it for the long term and not just for next year.
Markets can go up and down. How you cope with that changes over time. Younger people can embrace smart risk for their investments. For older people, especially those living off their investments, it's about managing the risk so they don't derail their plans. It's how you respond to volatility that matters. If you panic and sell, you'll probably lock in a loss. Invest through the market's ups and downs though, and you may get more for your money in the long run. And being well diversified means you're even more likely to have a smoother investment journey.